What's up, everyone? It's Scotty with MoneyVest. So we've got a big week on our hands. We've got not only earnings season pretty much getting started officially, even though some banks reported last week on Friday. We've got tech earnings, including Tesla and Netflix, that's going to set the stage for the earnings of technology companies. We've also got Jerome Powell talking next week. I'm going to go over that. We've got very, very important jobless claims numbers coming out, even though they come out every week, but it's going to get more and more important as weeks go by, because of the fact that 12 to 14 months is the average lag time, is what I discussed in one of my previous videos, that relates to the inversion of the yield curve, and that's when it actually starts going up. I mean, that chart that I mentioned in my previous video is still kind of haunting me a little bit, because that's a very, very important leading indicator for the Federal Reserve and, of course, for the economy, for the markets as well. We do also have a lot of Fed speakers, and when I say a lot, we've literally got a lot of Fed speakers talking next week, and that's exactly what we are going to discuss in this video. As always, if you enjoyed, find it helpful, make sure that you drop a like, and don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. We'd love to have you on board as a MoneyVest member. We've got lots of exciting stuff happening in the background that we are going to be launching very soon. We already got stock reports. I'm going to be sharing 5 new stock reports here with the members very shortly. And of course, we've got the MoneyVest Pro platform launching in 2024. So if you want to get access to the beta launch, link's going to be down below, and we'd love to have you on board. So this right here is going to be the chart that I mentioned is kind of haunting me a little bit. And this is from Piper Sandler, which basically suggested that the jobless claims, which again is one of the leading indicators of how well the economy is doing, because jobless claims translates directly to the unemployment numbers, the labor market, which directly impacts the economy. You'll notice that we are still very muted. We are still very subdued at under 200,000, 210,000, in and around those numbers. But this right here is the months following an inversion of the yield curve, which obviously 12 to 14 months is the average lag time, or in other words, not really average, but that's how long it's taken for the jobless claims to remain intact before spiking higher in 8 of the last recessions, in 69, in 73, 79, 81, 90, we got 2001 and 2007. So there's definitely this chart, keep in mind, is very, very important. Okay, switching gears to next week now, we've got lots of companies reporting earnings. So to point a few, we've got Bank of America reporting, we got United Airlines, we got Lockheed Martin's going to be reporting, Goldman Sachs, we got Johnson & Johnson, we got JB Hunt, Interactive Brokers. Those are going to be on Tuesday. Then, of course, Wednesday, very, very important day. ASML, one of the stocks that I actually own. Tesla, of course, my biggest position. We got Procter & Gamble, we got Morgan Stanley, we got Lam Research, and Netflix reporting on the very same day after the markets close. And on Thursday, we got AT&T along with American Airlines. We got Intuitive Surgical, and of course, we have got a little bit KeyBank as well. So those are going to be the companies reporting. Sorry, this is a fly, super annoying. And TSMC is going to be on Thursday before the market opens. Now, if you come over to the economics calendar, we do have 8 FOMC members talking next week, starting with Patrick Harker. That's going to be on Monday at 10:30 a.m. and once again at 4:30 p.m. We got Michelle Bowen and we got Tom Barkins. That's going to be on Tuesday, along with retail sales numbers coming out. And we've also got John Williams talking the very same day. We got Christopher Waller on Wednesday, John Williams once again, Michelle Bowen once again, and the Beige Book comes out at 2 p.m. Eastern. Super, super important numbers that basically goes over what the Federal Reserve banks and how are they seeing the economy develop in terms of everything, right? Economic growth, labor market, interest rates, inflation, pricing pressures, everything's going to be discussed in that Beige Book. And of course, we got Patrick Harker once again, Lisa Cook's talking at 6:55 p.m. on the very same day as well. Now, Thursday, October 19th, we've got Philip Jefferson talking, jobless claims on the very same day, and Philadelphia Manufacturing Index. And all the way down here, we got Jay Powell, right? That can easily get missed, but Jerome Powell is talking at 12 p.m. Eastern. He's the only one in red. Everything else is in black. That means he is, again, the most important person, obviously, for monetary policy that's going to be talking. And we got Patrick Harker and Loretta Mester talking on Friday, October 20th as well. So lots of Fed speeches, as well as retail sales, as well as jobless claims, manufacturing index, Jerome Powell talking. And this right here is going to be those remarks at the Economic Outlook at the Economic Club of New York, ECNY, Luncheon. And that's going to be at 12 p.m. Eastern. So 12 p.m. Eastern on Thursday, October 19th is when he's talking. Now, when it comes to retail sales, these right here are going to be the expectations. 0.3% expected on a month-over-month basis, and excluding vehicles, 0.2%, and ex-vehicle and gas, it's going to be at 0.1%. And the prior number is obviously at well over 0.2, 0.6% month over month. So again, retail sales have continued to come in super strong on the back of credit card debt, which continues to go higher. So consumer continues to spend on the back of borrowing, right? So borrowing and then spending all that money. Savings rate continues to deplete, and it's once again down in the mid-low single digits here. So jobless claims, 214,000 is going to be that number. Prior number was 219,000. Now, this is not a concern. This is not a concern yet, right? The big keyword here is yet. I want to write it down so everyone can understand it. It is not a concern yet because we are still at 214,000. The moment we start crossing over 400K, then it's going to start becoming a very, very serious problem that I think everyone should be paying attention to because rising unemployment benefits leads to rising unemployed persons, which leads to rising unemployment rate, which leads to lower productivity, lower economic growth, which leads to higher chances and higher probability of a potential recession. So we're not there yet, but the first chart that I showed you guys, very, very important, and keep that in mind. So yet, not yet. So that's where we are. And now looking at the S&P 500, so if you come over to SPX, we are in a very nice consistent downtrend. So what we have witnessed for the SPX, of course, is this right here. Is the downtrend for the market as it continues to make these lower highs and these lower lows, right? So this right here is going to be that lower high and lower low, and we're consistently trading in that range. You know, we obviously did push higher very nicely. So this right here, not the last week, but the week before that, we had a very nice green sort of week as we pushed higher, and that was actually one of the reasons why I did take a trade on DFAN, on TQQs, and then of course now we're starting to roll right back down, and another bounce was very nicely at 4,200. That's the 200 SMA, but we are once again trading below the 100 simple moving average, so we are getting rejected at this previous support and the 100 SMA at 4,400. So going into next week, there's only going to be two levels that I'm paying attention to. The first one is going to be that 200 SMA at 4,200, so that's going to be this level right here at 4,200, 4,200, 4,220, and a resistance sitting right over here, sitting at 4,400. So that's the range within which the S&P is. If it actually breaks out above this, then the next level is going to be 45. So we're watching this level next at 4,500. If S&P breaks out even above that level, then it would confirm a higher high and higher low. And this pattern that I mentioned earlier of lower highs and lower lows would no longer be invalid. So we would simply be looking at higher highs at that point and some higher lows. So we are basically putting in a higher high. That's a reversal in the overall direction of the market. But in case we don't get up there, in case we come back down, retest the 200 SMA, or even break down, well, that's not going to be great news. That's going to result in more potential volatility and the VIX spiking higher and more potential downside for the market, which is going to create what? Buying opportunities, and of course for us to come in and swoop in some deals once again for the market. So that's where we are with the S&P. Now moving over to the NASDAQ. So this right here is going to be the NASDAQ here. Same exact pattern. So as you can see, lower highs and lower lows. And right now getting a little bit of that rejection here. Didn't quite get up to as high as 13,800, but of course seeing that resistance once again, and support level is going to stay put right here inside this green rectangle at 13,000. In case we see a breakdown below this, well, then the next support is going to be 12,600 in line with that 200 SMA as low as 12,550 in line with this lower low and this horizontal support, which previously has acted as a previous support as well. So those are going to be the levels to really be paying attention to. And volatility here, once again, back up to over 90. It actually traded as high as 20 on Friday. So that was a pretty substantial move. And of course, right now, we're kind of dealing with that resistance once again at over 20 levels for the VIX. So I hope you guys enjoyed this video and found it helpful. Let me know your thoughts down in the comment section below. What you're watching for the upcoming week. And don't forget, Jerome Powell is also talking. Jobless claims are going to become increasingly more important for the market as time goes on. And again, the market, S&P 500, 4,200, 4,400 support and resistance. NASDAQ, we're looking at 13,800 at resistance, and support level is going to stay put at 12,500, 13,000 levels for the market moving forward. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. And as always, happy investing. I'll see you all in the next video.